I believe we're started. Hi, everyone. Thank you so much for joining here today. We're having a workshop based on a recent report that Starling Insights put out called Supervisors on Supervision. And really, to give some brief background before we get into it in more detail, what we sought to do here was to conduct a stock take of global supervisors and their views on culture and how we can supervise culture more effectively, and why some of our efforts in the past may not have been as successful as we would have liked to see, and how we can improve that going forward. So just by way of introduction here, my name is Cameron Lawrence. I'm the Director of Research at Starling, and I help lead the production of content at Starling Insights, which is a community buy-in for supervisors, banking leaders, academics, really just a kind of broad community focused on these culture and risk management issues. I, however, do not have any experience as a supervisor myself, so I thought it would be wise to bring someone along that can bring some experience that I think you'll all be able to relate to. And so, Elizabeth, would you like to introduce yourself?
Sure. Hi, everyone. I'm very pleased to be here with you. And let me just start by complimenting you for joining this incredibly important workshop that we're having today. It's really important that we engage with all of you on this topic because it's under quite a bit of discussion at the moment, which we'll elaborate on in a few minutes. So I'm Elizabeth. I've had experience on both sides of the Atlantic as a supervisor. Most recently, I was on the board of the ECB as a supervisory board member. I just finished my term. I began my career at Goldman Sachs, so I've been a banker. I moved on to the New York State Banking Department, where I served as the superintendent of banks. And in between, I was a consultant at Promontory, leading the New York office and the European office and advising a lot of supervisors and banks. And so I want to introduce you maybe a little bit more deeply to the topic that Cameron opened. I'm a mere participant in this. I was the very honored person asked to write the closing chapter 4 of this report. But it's a work that Starling undertook for 4 years, for 1 year, excuse me. And for an entire year, they did a global stock take of the supervisory perspectives and the experiences in culture risk, in governance, and in supervision. They organized the work to be led by a team of current and former supervisors. And honestly, I give a little editorial of my own. It's breathtaking in its scope in terms of what Starling decided to undertake and was actually in the end able to execute on. They did a deep research, and my compliments to Cameron as the director of research in spearheading this work. 8 years of compendiums were published. The compendium is an annual report that Starling undertakes where they gather together global experts, supervisors, academics, and industry people to comment on a particular topic. So they mined the information from 8 years of compendiums. They also publish Starling Insights, and they do deeper dives. So they had a concentrated effort that they focused in on from those over 200 sources that they had. And so in the end, between somewhere 50 to 60 sources were used to produce this stock take. And there were, in addition, 30 leaders that were interviewed that were, sometimes part of the 200, but also they were re-interviewed very specifically for a deeper dive on this topic. And for your information, and please pass this around, the report was published. It's 300 pages. There's an excellent executive summary that you could read. Maybe you could read the closing comments. But we're really looking for public comment, and it's opening on next Monday, on December 15th. We will open a public comment period, and it's important. We'll keep that open until next year, because it may be that some voices were not included, even though, as I've said, I think it was breathtaking in its scope. And I've never seen something quite as broadly done as this, and as comprehensively done. But the point is to get it right, and it's important to get it right. So why? And why focus on culture risk? So it's a recent topic. We had the March turmoil of 2023 that was, for a lot of us, we had all-nighters for more than a week, and the supervisors on this line will recognize that. And it was global in its impact, and it wasn't clear whether we would come out of that week with financial stability intact. And in fact, we did. And my compliments, especially to the colleagues at the Federal Reserve and the FDIC and all of the global supervisors that cooperated on that in the UK and the ECB and elsewhere, because it had a global impact. But it's not just from 2023 that we've decided to focus on this. It's really something that was found. Culture risk was found to be an issue as a root cause following on the great financial crisis. There was a bipartisan financial crisis inquiry commission pulled together that produced a report in 2011, and they found that dramatic failures of corporate governance and risk management at many systemically important financial institutions were a key cause of this crisis. That was echoed by the FSB in 2014. They found that weaknesses in risk culture are often considered a root cause of the global financial crisis. Literally from Canada to Australia and everywhere in between, supervisors have grappled with this issue, and they found that risk culture is a determinant of getting it right means we can avoid a systemic meltdown. It means we can avoid bank failures. It means we can protect citizens' savings. In fact, there have been regulations adopted using the word culture. CRD4 in Europe, in 2013 was adopted, and it said effective oversight of risks by the management bodies, fostering a culture of prudential risk taking is essential for sound risk governance. So there's requirements in place. There's senior management regimes in various jurisdictions. In Canada, the focus is on financial integrity, which is linked very much to culture. And in Australia, where there were systemic failures from mis-selling and conduct risk, again, culture is mentioned quite prominently in the APRA guidance and dialogue. So maybe I've made the case about why now by just walking you through the historical context, but why now, and maybe we turn to the next slide, is really, we need to emphasize this point. And, I'm always reminded of the Jurassic Park movie where there's that famous scene where, the dinosaur is chasing after the car, and the little sign is images are closer than they appear in the rear view mirror. Even though this is only, much more than a decade ago, memories are fading about why risk culture is so important. And there's today an active debate, and there's, supervisors are facing increasing pressure to emphasize growth and competitiveness in their mandates and alongside of oversight. And there are concerns about the softer aspects of non-financial risk. And, the word culture is kind of a squishy word. And, in fact, I will take even, some criticism about this. I think it's right. We haven't made a coherent and a consistent, comprehensive supervisory program that has enough buy-in, let's say, from very important stakeholders, the policymakers, the public. And maybe we've, strayed from mandates in some cases, I don't know, but it's, I know from, a lot of experience that this is a field that matters, and getting it right means that we can fulfill our jobs as supervisors. So I think it's very important also to recognize that supervisory judgment is being called into question, and whether that's being exercised, the discretion that's there is being exercised with appropriate discipline. And let's say, I'm an enormous believer in the exercise of supervisory judgment. The men and women who have spent their careers in public service in doing this mission work to protect savings. We're not doctors in supervision. We're not saving lives, but we are saving life savings. And this matters to families, to individuals, to businesses, to an overall healthy economy that allows us to lead productive lives. So if we are going to rely on that, important judgment that those men and women have developed from a lot of experience, we have to make sure that there's buy-in about it. And I want to protect that and promote that. So, we think that today what we have to, probably move toward, and at the ECB, they've used wording that I quite like, which is constrained judgment, where it's understood where that judgment comes in and it's disciplined. So, really, again, I'll repeat, I'm excited that you're all here today because there's a need for a global effort to protect the importance of this area of the supervision of risk culture and of the exercise of supervisory judgment. And we have to explain it. We have to be transparent about it. We have to do it well. And we need your input in order to get it right so that we can do it coherently. So what do we hope to achieve today? What we want is to meet with you and ask you, please, to be very interactive with us. We don't mean for this to be a lecture. We really mean for this to be an exposure for you to what we found in each of the chapters in a very brief way. We'll run some surveys of you. We will have discussion, and we really ask you to engage. We hope to emerge from this discussion with, in the end, a firmer structure for discussing and evaluating new approaches. We're living in a technological renaissance. We want to harness that technology in a way that contributes to the efficacy of the supervision of risk culture and the exercise of supervisory judgment. And so, we think talking about SupTech tools, and that's an area I spent a lot of time on at the ECB. And my colleagues did an absolutely great job there. We need to harness that and bring it to bear in this very, very important area. So it's just an encouragement to bring global stakeholders together and to really contribute to getting this right. So with that, I turn over to you, Ken.
Great. Thank you so much, Elizabeth. And before we really get into the content, I'll just give you a brief overview of the structure of the report, because that's how we've kind of structured our conversation today. So the report, as Elizabeth mentioned, she was the chair of the 4th chapter. So the report is built into 4 chapters. The first really focusing on why do we care about culture at all? As supervisors, as banks, why is this something that we need to be concerned about? Chapter 2 is really focused on the consequences and challenges of the status quo. What goes wrong if we continue to allow things to go in the way they've been going? And why is this something that we need to act upon today instead of in 5-10 years from now? Chapter 3 looks back on the incredible efforts that have gone on in the supervisory community over the past 15 years to grapple with this culture question, ever since, as Elizabeth mentioned, the global financial crisis. Where we've seen success stories, what we can learn from those, where we have learnings on things that we can improve going forward, those sorts of conversations. And then chapter 4 that Elizabeth led is really focused on what does good look like in supervision. So great, we've looked at what we've done in the past and what we can learn from that, but where should we be going in the future? And that's really what Elizabeth sought to discuss, and we'll get to that in a moment. And then just to cover today's session, for each of those chapters, I will review some key findings from our stock take. We will then highlight a few quotes from the supervisors whose input went into the stock take, just so you can see some of the thought process that went behind those findings. And then Elizabeth will discuss some of the open questions that come out of the stock take, and really that we're looking to answer or begin to answer through this comment period that Elizabeth mentioned. And as she said, we would really much prefer that this is a very engaged session. We want to hear from you. We have enough material here to lecture for the next 45 minutes, but I'd much prefer to skip some of that material and hear more from you all if necessary. There are 3 ways that you can engage. As Elizabeth mentioned, I will run some surveys in each chapter. We'll have a survey question, and then we'll have discussion questions that Elizabeth will lead. And really, there you can engage in the chat, and we can answer any questions, or read aloud your commentary and see other responses there. Or you can raise your hand. I believe that button is at the bottom middle of your screen. And then our host here, and we can bring you on stage. You don't have to have your video on, I believe. So if you want to come on just voice and kind of share your opinion, you're welcome to do that as well. But we'd really love to hear some feedback. And I'm optimistic that we've already seen some engagement in the chat here, that we'll get some of that today. The last thing I'll mention before we get started is that after this conversation, as Elizabeth mentioned, we will be opening a comment period on Monday next week. I will be on the GovSpace platform that I believe the SupTech Lab just launched in accordance with this event. They have a space which is, I believe, called Culture and Conduct Supervision. And I will go there after our conversation today, upload our slides, and we'd be eager to hear from you there after this. When our comment period launches, I'll share some information there, just so that if you have any further feedback as you think about these topics after today, we would love to hear it.
And Cam, you might mention also, we will have a link to the launch event on Monday that maybe you could also put there. And if you'd like to join that event on Monday, you would be able to join that virtually.
Indeed, yeah. So we have a launch event on Monday, half-day event in the morning hours Eastern time. It's hosted in New York, but it'll be streamed live. So I will share those details as well, and you're welcome to attend live for that as well. So to get started here at a natural place, as I mentioned, the first chapter of the report really focused on why is culture a supervisory concern at all. Just to review the supervisory leaders that helped us with this chapter: Carolyn Rogers, the Senior Deputy Governor at the Bank of Canada and former Secretary General of the Basel Committee, co-chaired this chapter. And she was advised by Charles Randell, the past chair of the UK FCA, and Brian Steyerwalt, the past chief executive of the Dubai Financial Services Authority. And to get into what this chapter really said, and what we found, is that there is broad agreement from every supervisor we spoke to that culture is fundamental to the stability of banks and to the financial system as a whole. Culture is seen as deeply tied to governance and the success of governance. However, despite that agreement, there are some interesting nuances here, most notably that there's not really a common language or definition as to what culture means. When supervisors talk about this globally, there's a bit of a swirl of overlapping terms that everyone, has their own term that they use to refer to these topics. So, you have conduct risk versus behavioral risk among different regulators. You have culture risk, which is, I believe, in use in Canada, versus risk culture, which is used in Europe and Australia. And then you have just organizational culture as a broader term. And there's not a lot of clarity as to the exact relationship between all of these terms. As I said, we know that culture is essential, has an essential relationship with governance. It's not clear entirely if culture is a part of governance, if governance is a part of your culture, how that relationship actually interacts. So all of this leads to a little bit of a lack of clarity as to best practices, only because it's difficult to start the conversation in that direction if we haven't defined our terms. And so probably one of the key takeaways that you'll hear throughout the chapters is the need for a little bit of coherence globally as to how we can talk about these culture issues. That does not mean, and I'll emphasize this again, uniformity on these culture issues. There are jurisdictional differences that must be respected and understood. We'll get into the impact of legal mandates and legal frameworks later in the discussion. And obviously, that has a massive impact on what you're able to do in this direction. But there's agreement to the principle that we need to have some sort of common language to understand what culture is and why it matters. And then from there, we can begin to build the appropriate frameworks and tools that we need to manage this and supervise this successfully. So that brings us to our first polling question. This is really just to understand how you all think about culture and how your organizations have sought to approach culture. So you'll see we're looking to understand whether you have defined something, a formal culture framework, and it's widespread throughout your organization, all the way down to our organization doesn't necessarily recognize culture as a supervisory priority. I will publish that poll now, and I believe you should see it come up on the right side of your screen under the polls section. So we'd be eager for your thoughts there. Once we get to the discussion question in a second, we will close that if we've gotten some input and see what you all thought. So while you answer that, as I said, it's helpful to kind of look at what the supervisors that contributed to our report said. And this one is interesting only because he is very clear and direct. Popped up on stage. Ong Chong Ti, who's a past deputy managing director at the Monetary Authority of Singapore, said, "It is my view that bad culture can be a key contributor to both conduct and prudential risks." And we'll return to that conversation in a moment. Here's a comment from David Bailey, who is at the Prudential Regulation Authority in the UK, but was an advisor to this report, as you'll see in a moment, in his role as the co-chair of the Supervisory Cooperation Group under the BCBS. And he got to an important distinction here that we'll also talk about in a moment, which is that if supervisory organizations are going to better address culture, then they also have to understand their own cultures and how it affects their outcomes. We have the last one here before we get to the discussion is from Carolyn Rogers, as I mentioned, the co-chair of this chapter. And she really discussed why this lack of coherence can be difficult on a global level, and said, when regulatory regimes diverge, the playing field is no longer level, the cost of compliance climb, and the opportunities for arbitrage increase. So that then...
Should we pop up the polling question one more time?
Yeah, sure. We can show it on here. And in a couple of seconds, I'll close it. We've gotten some answers. And the results are kind of interesting. There we go. Elizabeth, I've closed that. Before we look at the results, do you want to read out the question and share your views?
Yes, indeed. So in opening the discussion on this, what we're curious about is, what are your own views on culture as a matter of supervisory interest? And I see some comments in the chat. That's the first time being talked about as a supervisory issue. So that's a very much on point comment in the chat. And the question that we have is, do you think it's primarily a subject for conduct supervisors to address, or does it have prudential supervisory implications? And I bet that's what's behind the chat there. And if you don't mind, Kim, I'll just share some experiences that I've had. You know,
Please.
I was banking superintendent in the early 2000s in the run up, the exuberant bubble period. You know, what crossed my desk at that time, since we supervised both the mortgage banking industry as well as large investment banks for their international operations and most of the largest domestic banks in the US, we saw by cracking files in the mortgage banking industry that, you know, predatory lending was rampant. And we passed laws against making loans to people who did not have the ability to repay that loan. And I'm an investment banker by training. I spent the first 10 years of my career at Goldman Sachs. To my surprise, the market continued to explode, even though we put these rules in place. And so I broke out the prospectuses for the securitizations of the subprime loans to try to understand what was happening there. And what you could see was that the securitizations had, you know, provisions in them allowing 5% of the securitization to be replaced if they were found to be non-compliant. And there wasn't a lot of due diligence taking place about that component. And so we wrote a letter to Wall Street at that point in time, which we did not regulate. And we said, you know, take care, have a look at this, you know, from a due diligence point of view, because if those loans go under, you have to replace them. And you should be aware that we are seeing many, many, many loans that are not compliant from these mortgage bankers that you're doing securitizations for. So what's the point of that story to you? It's where, again, in my career, I've seen the nexus of two risks come together to sort of explode. And here I mean the nexus of conduct risk transforming into prudential risk and then transforming into systemic risk, because these two risks came together. So for me, it's very important that there be an observation by prudential supervisors where conduct risk transforms into a prudential risk, where that nexus meets. But I'd love to hear from all of you about that.
Yeah, Elizabeth, we have gotten a little bit of input here. Specifically, I'll just mention that Teresa, I believe, from an insurance supervisory authority mentioned that this is the first time she has heard of culture risk discussed in the context of supervision. So, you know, that's kind of the point of why we're here today. And I would encourage you to look at our compendium from this past year. We had Shigeru Arizumi, who was at that point, and I believe has since stepped down, chair of the International Association of Insurance Supervisors, really talking specifically on why this is a prudential matter in insurance. I think you'll find that very interesting. And then Elizabeth, I'll put this question to you. And I think it's one that we'll discuss, so we can also come back to it. Are you mixing good corporate governance and culture? Does bad culture transform into systemic risk? So would you like to, I know you just kind of went into that, but it'd be great to.
Sure. And I think that's a great question, you know, because good corporate governance is one thing, and culture, you can view it as another thing, but risk culture is part of good corporate governance. And that's where I think that nexus comes together, and where that nexus occurs in systemically important institutions in particular, or let's say today in large non-bank financial institutions that are very active in the credit markets, for example, it can have systemic implications if there's a failure. And so this has been analyzed after the great financial crisis in a lot of detail, which is why I want to remind about that historical experience. And what was found is that a culture of outsized risk-taking that is unchecked in the corporate governance framework leads to systemic failure. So what does that look like? It looks like maybe one thing is being said by the senior leadership, but the actions are different than what is taking place in the institution, and the incentives that are put in place are different. And so the translation into what the market dynamics that are being driven is a different one than what they say. We know that happened. We also know that short-termism, that a culture of driving risk-taking for short-termism without understanding long-term sustainability of a business model and what systemic implications might arise from short-termism, risk-taking. That's cultural. What kind of risk culture are you promoting? So you see, I mean, we're making the point that we need to define it, and then you need to, the old adage is you can't manage what you can't measure, or you can manage what you can measure, and so measurement of these things is very important.
Great, thank you. And Elizabeth, before we move on here, I'll pull it up on stage because we got some interesting results from the poll, only for what it tells us about what we can learn from this conversation. So it seems like we have kind of two larger groups here, where we have organizations that have a formal framework around culture, and then organizations that maybe have not formally recognized culture, or really have understand that it's important, but don't have the sort of formal frameworks uh, built around it at this point. And so for those of you that your organization does have a formal framework, we'd love to hear kind of your input as we go forward. And then for the rest of you, as you're kind of diving into this, we'd really love to engage with you on your first reactions as you're thinking through these things. So Elizabeth, do you want to? This kind of just gets to what you just mentioned. So perhaps
there's a great quote from my dear colleague Sabine Lautenschlager, and she said, "Look at Credit Suisse. A single bank failed inter alia because of cultural issues, and it's not just conduct; it's broader. Conduct risk eventually moves into financial risk. That affects the bank's risk-taking capacity, and in severe cases, even its stability." I might underscore this point because for those of us that had a mandate for conduct risk in addition to prudential risk, it was often completely siloed. And it was really the first time that we understood that what happens in the area of conduct risk can have very significant prudential implications. And it made it more important. It really made it more important.
Great. Well, I see we still have some engagement here, but we can return to some of that as we get to the next discussion section. So we can.
One question.
Sure.
I see a number of comments in the chat asking if they can join on Monday. Maybe do you have the possibility to put the agenda and the link in there
Sure.
for the
Yes,
Monday
I
event?
will.
That might be easier for people, maybe near the end. Okay.
Certainly. Yeah, I can drop that in during the next discussion question. I'll add it in as a resource, and we can look at that.
Great.
So moving on to chapter 2 here, only because Elizabeth and I could both talk about this all day, and we have 25 minutes left. So hopefully the Soup Tech Lab doesn't get upset with us if we end up going a tiny bit over. But moving on to chapter 2, as I mentioned, chapter 2 is really the consequences of the status quo and why we can't just keep doing the same things that we've been doing over the past decade or so. This chapter was chaired by Fernando Restoy, the chair of the Financial Stability Institute, and the advisors for this chapter were Michael Hsu, past acting comptroller here in the US, and who I believe spoke yesterday. I haven't had a chance to watch that session, but I'm looking forward to tuning into that this afternoon to see how that went. And Eva Hupkis, the Secretary General of the International Association of Deposit Insurers, who was also previously the head of supervision priorities at the Financial Stability Board. So she really has kind of a broad view on these topics. So, and I'll try to move a little bit more quickly through this one than the last one. But culture problems and culture risk has proven very difficult to act upon preemptively in the past. And this is for two reasons. Actually, I think there are many reasons, but we'll point to two specifically. One, the signals that would allow supervisors to be predictive and for banks to be predictive in this regard just aren't typically present in the traditional data sets that they are working with. Many of them likely have the data they would need, but as we heard frequently throughout this report, supervisors have mountains of data and frequently trying to figure out which data will actually distill the signals that you need is a challenge in and of itself. And then also, there's kind of a defensibility problem when acting preemptively around culture, because typically the issues don't appear in the financials until long after it's kind of too late to be acting preemptively and to prevent the issue. Now you're resolving something that has already emerged. Um, and this kind of leads to this delicate balance for supervisors around, we need evidence to prove that something is happening, but also there are some times where my judgment from years of working on these things and from talking with bankers tells me there's something wrong here, and I just don't have what I need to act upon it defensively in a way that doesn't lead to challenge. Um, and so this is kind of a key issue, is how do we balance the evidence that we need and that, is kind of the basis of due process, while also allowing for the judgment that supervisors gain throughout their experience that allows them to kind of see these things before they're evident in the data. And one of the key things that we heard here is that better frameworks, so clearer frameworks and technology, specifically SupTech, can provide the structure to judgment that allows supervisors to get out ahead of these issues more effectively. It may give them evidence that they can point to when taking action, such that it's not just, oh, I believe that there's a culture issue here strongly. They can say, look, this shows that there is something going on here, and it needs to be acted upon. This isn't just a tool issue. There's also some cultural factors within the supervisory authority that need to be thought about here. How do we ensure that supervisors have the confidence they need to speak or to work on these things preemptively, and to get out ahead of these issues? How do we deal with the hesitancy that can sometimes lead to delay of escalation, or an action regarding enforcement? Those sorts of things that were discussed substantially after the most recent banking turmoil and after the global financial crisis. There's more here that I could talk to, but just in the interest of time, Elizabeth, is there anything else there that
No,
you
I think I
worthy of
would
mention?
I would encourage moving along, but I would pick up, there's a comment in the chat that I think is very important. Culture is key and has been a focus for many since the global crisis. Consider culture and the Royal Bank of Scotland failure. More work in this area is welcome, but criticism of those advocating assertive active supervision is unhelpful. I just want to address that head on. If there's a view that this report is critical of assertive active supervision, I want to put that to directly say absolutely not. I couldn't be more of an advocate for assertive active supervision. And this is an area that I'm worried it's going to get scuttled, and it's critically important. So I have to agree that we need to get it to be more coherent and to use tools to do it. I think that's the main point. So just I'm really an active. I'm very important about that.
Great. I will open up the next polling question here, really about what tools do supervisors use to support examiners' judgment, specifically on culture matters, but also on any of these kind of emerging risk issues where there's not a clear framework in place quite yet. So I will publish that here, and it'll be over on the side for for you all to look at. And I'll move a little more quickly through these quotes as well. This one is from Eva Hopkis, who, as I mentioned, advised on this chapter. And she argues that the Credit Suisse case that we mentioned a moment ago demonstrates that when you don't have clear measurement for these culture issues, it can sometimes lead to delay. And this is even worse under these kind of digital conditions where information can move much more quickly than it ever has before. We have another one here from Mark Branson, president of BaFin in Germany. And he argues for the supervisory community to brainstorm indicators that surface culture problems, and to agree on, what we're going to look at for these culture issues kind of more broadly. And then the last one here before we get to the discussion. And this is an important one that we'll discuss again, and is really why these sorts of conversations are so important, which is that it's really important for the regulator to talk to the industry and to listen. It's incumbent on the regulator to engage and to be approachable and to be able to have someone actually speak to people.
So I'll pick up here on a discussion for all of you while you're answering that poll. What techniques and tools could help supervisors to become more proactive and more forward-looking? And this is a really important point. I think, we're at a tipping point with supervision when we analyze the lessons learned after the different bank failures that have occurred, whether it's Credit Suisse, SVB, or if we go back, even to LTCM, where I was in the chair in New York. Those are helpful, but those are backward looking. And so what we want really, what we've been focusing on in the supervisory community has been, how do we become, not that we need a crystal ball, because we're not going to get a crystal ball, but how do we harness data and AI and the technological developments that are taking place now so that we can be more proactive and correctly assertive and more forward-looking. And it's possible to do that. How can supervisors ensure that their culture is supportive of these efforts? So, I'm curious, what are you using? How are you doing this? What do you see? And especially the second question, there's 2 points here. One is the culture in the banks. And by the way, I love the comment that you can't supervise what you cannot regulate. Good point. That's an important point. But you can speak up and put out there that there's concern and risk. But how do you also pay attention to the supervisory culture itself, that it is also being developed in an appropriate way? And I know all of us have had projects underway on our own supervisory cultures as we're adjusting in this technological renaissance that we're in. How are we supportive of those efforts? And it's a big lift, I think, to move toward using more technology and making sure that there are appropriate guardrails and there's transparency and there's clear communication about what the supervisory requirements are and objectives are. It's not a Wizard of Oz activity. I'm a huge believer in using the blinkers to signal where you're going, because guess what? That gets the job done in the market, because then the market moves in that direction, hopefully, as long as they agree with that.
Great. And while we see if there's some engagement there, Elizabeth, I will show the poll up here. We can close it and look at the results here. And this is really kind of the key point we're looking to get at in this discussion is, there's a lot of great tools here, but there are fewer ways to bring metrics and data to these discussions. And so that's really what we have focused on at Starling over the last couple of years, is discussing how we can make culture measurable, and as such give supervisors kind of firmer ground on which to act, regarding these cultural matters.
And so maybe we want to turn also to what the supervisors said.
Sure.
And my dear colleague Fernando Restoy had a commentary on this discussion point that might be good food for thought for all of you. And he said, discretion, if it is to remain legitimate, must be disciplined by process and informed by frameworks. We must ensure that discretion does not become a synonym for arbitrariness or worse, for inaction. He's the chair of the Financial Stability Institute. He has a long career in banking supervision. He was deputy governor at the Banco de España. I worked with him all-nighters again on the stress testing to do the valuations in Spain at the height of the global financial crisis hitting the sovereign in Spain. He has an unbelievable insight, academic insight into the need for strong assertive supervision. And I think this comment is about the discussion that's underway about how supervision is being done, and we need to react to it.
Great. And I'll just read out a comment here, and then we can kind of move on here, and I will drop our discussion question into the chat just so that you all can keep thinking about that, and we can keep the conversation moving. But we have a comment that says, perhaps organizations can have online forums where employees can share their concerns within a safe space in groups that they feel safe in, or even anonymously. From there, supervisors can be informed on current issues that worry their employees. And I think this is certainly something that is happening broadly. Maybe not in this exact circumstance, but I do know supervisors that we spoke to were doing things like thematic reviews where they would go and speak to employees at all of the banks and get kind of their honest feedback, even if it's not meant to be for enforcement. So doesn't necessarily need to be, it doesn't necessarily need to be that if something's wrong, we're going to punish you, but more, let's understand where the industry is at, so that we can start to raise the bar there. So I think that's a fantastic idea.
If I can just add to that very briefly, and we did a whole effectiveness of supervision review at the ECB, and we did a number of global interviews also. And one of the comments that most struck me was from a colleague who was in a central bank, and this central bank had monetary policy authority as well as supervisory authority. And he made exactly this point, that it can't just be that what is supervised and how it's supervised is a top-down, and monetary policy is a top-down activity. And a risk in a central bank where a supervisory arm is also there is that only this top-down approach to which are the risk priorities is followed. He made the point that you really have to be paying close attention to what those on the ground are saying. Supervision is a rubber meets the road, where the car is on the road activity, and you need to understand the field conditions extremely well. And it has to be the case that there's a feedback loop from the employees about what's happening. And this point is particularly poignant in probably a central banking context.
Great. And I'll just mention here, Elizabeth, before we move on, that in the resources tab on the right side, you'll see that we have added the deeper dive report that you can go to the download page, as well as the page for our event on Monday. You'll see there how you can reach out to us to access registration details, and we would love if any of you would attend that discussion. So moving on to chapter 3 here. As I mentioned, this is where we really looked at the past efforts to manage these culture issues. The chair of this chapter was Wayne Byers, who previously served as the chair of APRA. Sarah Dahlgren and Maria Rajmakers, so past head of supervision at the New York Fed and the past senior supervisory officer at the DNB. Sarah Dahlgren really helped lead the beginnings of this culture work at the New York Fed in the early 2010s. And similarly, Maria helped to design the behavioral risk framework at the DNB that was really groundbreaking and brought they have been a real leader over the past 10 years or so in spreading that methodology to supervisors all around the world. So just to run through this kind of quickly, there have been, none of this is to say that there has not been immense effort on the part of supervisors to address culture in the past. Over the last 15 years, there has been substantial experimentation and new approaches adopted. So you have things like accountability regimes that have been adopted in order to institute more of a culture of accountability in the sector. You have enhanced governance expectations. I know the ECB has really focused on risk culture and governance over the past few years. There's behavioral assessments and behavioral science work, like I just mentioned at the DNB. And it is absolutely worth noting that there are a lot of successes to be celebrated in those efforts. There has been a lot of truly innovative work to bring more of an analytical mindset to these culture risk supervision concerns. But in those successes, there are also a lot of learnings for how we can do better going forward. And there's also some barriers that have prevented those methods from being more widespread. So, a lot of these behavioral approaches are very manual, very time intensive, and require a lot of resources on the part of the supervisor. And that limits the ability for a supervisor to scale those across larger markets and across entire organizations. Another key insight here is that if we are to kind of make more progress going forward, that supervisors also must look inward and embed cultural considerations into their own practices, workflows, and expectations. Because just as the culture of a firm is deeply linked with the success of their governance efforts, the culture of the supervisor is deeply linked with the success of their supervisory efforts. And then just as a final note here, supervisors really emphasized the importance of bringing new technology tools to these culture questions. Not only did they point to the value of that technology in scaling the approaches that I just mentioned, but also of providing kind of a reliable means of measuring success and providing that evidence for their supervisory action that we've discussed as being so essential. So I will bring up here the third polling question. This gets to kind of those barriers that impede successful implementation of new supervisory approaches. This can focus on culture, but it also focuses on soup tech and the other kind of innovative activities that supervisors undertake in order to try to kind of move forward. So I will publish that, and it'll be over on the right side for you all while we kind of look at the comments from supervisors in this regard. Andrea Enria, who is a former colleague of Elizabeth and is brilliant when it comes to a lot of these issues. He argued that AI tools could help focus supervisory attention on culture because it may provide more of a basis for that supervisory judgment that has faced many questions in the past few years. And, a lot of some firms have outright rejected the use of supervisory judgment as valid. And I think one of the key outcomes of this report is that supervisory judgment is essential. We just need to find ways to structure it to help defend against those sorts of things. Another quote here from Arthur Yuen, Deputy CEO of the Hong Kong Monetary Authority. And he argues that if you are setting desired values and behaviors, aka a desired culture at the top of your organization, you need mechanisms to determine how those values are translating into the day-to-day behaviors. And then another quote here on the value of data and technology in these culture questions. I know we're running up on time here, so Elizabeth, do you want to just kind of run through this question? I'll drop it in the chat. We can get to the end of chapter 4 and maybe just have a final wrap-up discussion.
So what would encourage more rapid adoption of new approaches and tools for culture, risk, governance, and supervision? And you all probably are using some of these tools. We're very curious if you could give some specific examples and how you're going about this and what kinds of tools you're using and how you're doing it.
Great. I've dropped that discussion question in the chat just so that you can all kind of consider that as we move forward.
And then we have a quote from our colleague. Maybe I won't read it out. You can look at it on the screen very easily, from Maria Rymakers.
Great. Yeah, and this gets to just to provide a tiny bit of color, just the kind of the legal basis for these sorts of supervisory efforts. I know there was a comment about the kind of the legal basis for discretion. And so she discusses in a piece for the report as one of the advisors kind of how they worked to bring this innovative behavioral science approach forward.
Her piece is terrific. It's worth reading.
It really is.
Yeah.
And then moving on to the final chapter here, there's a face you'll recognize. Elizabeth chaired this chapter, and advising her was David Bailey and Ben Gully, who serve as the co-chairs of the Supervisory Cooperation Group within the Basel Committee. And just to kind of bring this home here, broadly, and Elizabeth, I think this is, I'll ask you to jump in after, since this was your chapter, and I think your closing comments kind of most succinctly lay out a vision for the future. But chapter 4 really looked at what does good supervision and specifically culture risk supervision look like. Obviously, we've discussed a lot of what has come before. There are successes and learnings from those efforts, but this is more of a forward-looking exercise. We can't just focus on what has and hasn't worked. We need to focus on where do we go from here. And there's a strong consensus that supervisory practice must embed these culture considerations more deeply, and that they also supervisors must focus on their own culture to ensure that they are able to undertake that supervision defensively and to get a better understanding of how these topics impact their own efforts. Elizabeth, is there anything else you want to add?
I would emphasize 2 points here, and it would be the first bullet about durable, repeatable, and not episodic activity on the supervisory front. When we look at all of these lessons learned that are, they're always done, and they're very necessary. They are proctological reports on what happened and how it happened, and there's always something inconsistent that happened. And so, one of these things is you need durable, repeatable, but excellent forward-looking supervisory practices. Consistency for consistency's sake is not the point here. And one of the things I advocate for in the chapter is it's great we do the look backs and they're so necessary, but wouldn't it be useful if we also did some of the saves. I'm a mom of 7 kids, 5 boys. My husband has been the coach of the soccer teams, and I always noticed that all the cheering takes place for the goals that are made. But the guy who's or the lady who's making the saves, my daughter played hockey too. There isn't a lot of cheering for that. It's often unnoticed, and that's what the supervisors do every day. They make the saves, and they're not publicized. So I thought, wouldn't it be great if we could somehow, in an anonymous way, because that's probably necessary, but make it more visible to the public about how those saves take place and what those activities look like, including the ones in culture that where there's been a remediation that, it could have been a big fail. And instead, there was a save.
Great. Well, we'll run up on time here, so I'll let the SupTech Lab team tell me if we need to cut this off imminently. I won't worry about opening up this last poll. Okay, we have 5 more minutes. So why don't we, Elizabeth? We've gotten some comments here, so I will upload, as I said, this presentation onto the GovSpace platform. If you want to read through the rest of the quotes that we've had to kind of give short shrift, you are
Okay.
welcome to.
Okay, so you want me to go to where you are on the screen?
Yeah, we can start up the discussion, and really here, Elizabeth, if you want to read the question just so that we can open it up, and then we've already
Okay,
got some
so
comments here.
how can cross-border collaboration and public-private partnership be fostered to support the development of new supervisory capabilities, including SupTech tools? And my question here is, where have you seen such collaboration be successful? I know there's a lot of constraints about the public-private component, and I know some of you have, successfully found a way to hurdle those barriers, and very curious how you've done that. I think it's an essential thing with what's happening with the technological development, that we have the ability to work with the private sector and understand those developments and incorporate them. And then the other component is the cross-border collaboration. Having a coherent set of rules in this area, I think is, I don't think we've really put that out there, even if it's the taxonomy or the methodology in the supervision of risk culture and what it means. And, having a work effort underway to do that would be super useful to support supervisors, I think.
Great. And I'll just mention, if we're looking for cross-border collaboration and public-private partnership, the work of the SupTech Lab and conferences like this are exactly, I think, one of the first steps we need to be taking to really expand that. So I commend you all for engaging here, and we're really honored to be engaged. But just to read the couple of questions we have here before we finish up, we have our comment that says, in Nigeria, examiners do periodic town hall meetings where issues are discussed, experience shared, and inclusive leadership demonstrated. It's a good platform for resolving issues of culture and core values. And I think that's a really important demonstration of psychological safety and allowing people to speak up. And then the final one here is that in Malaysia, the tools for culture, risk governance, and supervision are mostly self-assessments, surveys, scorecards for board reporting, SAP software to determine risk data. And that's all really interesting. So yeah, Elizabeth put her email there. As I said, I'll be on the GovSpace platform, and we'd love to engage further with all of you on
I
these
wanted to
topics.
put that there because there was a question about why the ire on the IMF, and it seemed like a one-off. So if someone wants to reach out about that, feel free. I'm not sure what that is, so I thought I would offer. Or any other topic, please feel free to get in touch. And I'm honored, also very honored, to be here to talk about this important topic. I feel like it's the hallmark of my whole career has been the governance component and risk culture, and we need to get it right.
Great. I think that's our time, but thank you so much, Elizabeth. Thank you so much for joining me for this. This was a fascinating conversation, and thanks to you all for engaging. And I'll see you on GovSpace. And again, in the resources tab here, there are a couple links for the report and the event. And we'd love to see more of you there and to see some more engagement on this topic. I think it's very important.
Thank you all.
Thank you.
Bye-bye.